One thing that's interesting about Bitcoin is that it's over the long term, it grows even less than gold in terms of new supply. So it's even scarcer than gold, and it can move around as fast or faster than fiat currencies can. And so that's a really compelling long-term story to get people to gravitate towards it and change some of the structure. Although, in my view, that's a multi-decade story. That's not like a, 1 decade or a 2 decade story. It takes very long time to change these gigantic structures. And one thing that's notable about the Bretton Woods era is that a lot of focus is on that 1971 decision to leave it, but what the evidence shows is that it was breaking basically throughout the 60s. The Bretton Woods system, it was decided upon in 1944, it was implemented in 1946, but then it wasn't really even fully implemented until the late 1950s. That's when they undid some of the kind of the post-war era controls that were in place, and that's when they actually started that overall process. And from that point, the amount of gold reserves went straight down. And that's partially because we were running significant deficits. And it's also partially because banks, fractional reserve banks, were lending more dollars into existence, and they were not constrained by the amount of gold in the system. So you had an environment where, from 1950 to 1970, the broad money supply tripled as gold reserves diminished. And so the system was inherently unstable to begin with. It was always a rational decision to redeem some of those ever-inflating dollars for gold until they were going to run out of gold. And so we kind of have this story where we centralize everything, and then over a matter of decades, that centralized entity fails, partially because it was just unstably designed to begin with. It was kind of, it was like great while it lasted, but it was designed not to last, is the challenge.
Right. We are heading towards a brutal recession, but this is actually a catalyst for Bitcoin and crypto. That's the message out from macroeconomic expert Lyn Alden. In her latest interview, she broke down why the macroeconomic indicators are clearly signaling that the global economy is moving towards a recession, much like 2001. Why would a recession be bullish for Bitcoin and crypto? This is because in a recession, the central banks and governments have to print money, and in a high liquidity environment, assets like Bitcoin and crypto outperform the most. Lyn also broke down the Bitcoin ETFs and why institutions like BlackRock entering the space is a game changer. Make sure to stick around to the end of the video where Lyn reveals where she believes Bitcoin's price is going by the end of 2024. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's Lyn Alden on where she thinks Bitcoin is heading.
I have in the view of either no recession or soft recession, and the way I describe that is kind of sector specific recession, or the type of recession you generally see in emerging markets, which would feel quite different than a recession you get in typical developed market. So when people think of recession now, they often think of either COVID or they think of the 2008 financial crisis. Whereas, for example, if you go back to the prior recession, you had the 2001 recession, which was obviously very bad for equities given how overvalued they were. But the actual recession itself was quite mild in terms of the unemployment rate, in terms of the GDP contraction, in terms of what other sectors did. It was not a very severe recession by most metrics, and I think that to the extent that we do get a recession, and I admit, in 12 months there's a lot that can happen, but to the extent that we do get a recession, I would expect it to be more like that 2001 variety, where some of those unemployment statistics and some of those GDP contractions are maybe not as severe as people fear, but that of course can still have very big implications. I think one of the biggest concerns in the markets is that a lot of the bond proxy type of equities, so kind of defensive, high-quality equities, a lot of them have been bid up to very high valuations. Costco, for example, it's a great company, but the stock is trading at valuations that make it look like they're doing AI or something, right? And so
Exactly.
you have that problem. Yeah, and you have that problem where if you get even a middling economy, let alone a slightly recessionary economy, those valuations are just hard to justify at these very high levels. So I think it's very sector specific out. Bitcoin itself gives you multiple opportunities that the ETF does not. So for example, you can self-custody it, you can bring it around the world, you can use it for its monetary purposes, but not everybody currently needs or desires that use case. So if you don't foresee that you're ever going to want that use case, the ETFs can make sense for people. They have retirement accounts, they have managed assets, they have traditional brokerages, and so to the extent that the ETFs are now an option, I view them as better as GBTC has been. So now GBTC is also an ETF. The downside is its fees are higher than some of these newer ones. And so generally, if I had, for example, Bitcoin price exposure in a retirement account, I would probably rotate towards those cheaper alternatives, the Fidelity or the BlackRock, or these other low cost ETFs. If I was holding GBTC in a retirement account, I would talk to my tax advisor, because there can be, if you not always chasing low fees is the right answer, because you could get hit with an unexpected capital gain tax.
Yeah, you don't want to do that because you want to have the benefit of all that
All that compounding. Yeah.
yeah, good
So
bait, exactly.
yeah, our money's not as broken as others, and our savings, we basically monetize the equity market for our savings. That's what a lot of us do. And so it's easy for us to look around and say, what's the purpose of Bitcoin? I think when you look at the use case for it, you have to look at the global marketplace. There's 160 different currencies out there. And many of them do not have attractive equity markets or real estate markets for people to invest in. The question of liquid savings is very hard. I have a friend who's a physician in Egypt, and he literally stacks physical dollars like under his mattress as part of his savings, because he doesn't have a local equity market that's really attractive long term. He doesn't want to hold his local currency. So it kind of comes down to, he's got a little bit of real estate, but that's illiquid. And so it comes down to dollars, gold, and assets like Bitcoin and things like that. And so another complicating factor is that, let's say, for example, if I send money to a graphic designer in country XYZ, maybe it's Egypt, maybe it's Nigeria, maybe it's Argentina, they often will receive it in their local currency at a fake exchange rate, and they still have the problem of, what do I keep my savings in, or how do I make sure I raise my prices each year in line with the monetary debasement that's happening. And one of the cool things about Bitcoin, or stable coins for that matter, is that I can send them the money that they prefer around their local banking system, as long as it's not a sanctioned country for me, right? So for example, I would not send money to an Iranian, even though I would have the technical capability to do so. I wouldn't take that risk as an American. But for example, as long as they're in a country where it's fine for me to send it to them, we can go around their local banking system, which is the problem. I can send them stable coins, or I can send them Bitcoin over a call like this. They could hold up a QR code and I could send it to them. They could send me a DM or an email saying, here's how to pay me. I can pay them. And then now they're getting their full rate, and they're able to save it. They're able to bring it with them should they leave their country, which as Americans, we don't really think about leaving our country. But if you're in Lebanon, or if you're in Argentina, if you're in Venezuela, like I personally know someone who moved from Venezuela to Canada, and he brought Bitcoin with him, whereas many other Venezuelans just leave penniless as they try to flee, because it's very hard to actually bring value with you outside of countries that have that problem. And so I think that the main answer I would say is think globally, and think about a kind of a board with 160 different currencies. Most of them are rapidly devaluing. Most of them have capital controls to varying strengths around them. And things like Bitcoin and stable coins give people more options to self-custody money, to receive money they want, to go around, financial borders and things like that. So one of the main questions is, to what extent could it impact inflation? Because that can impact forward expectations of Fed policy and bond rates, which can then impact equity valuations, for example, or even things like Bitcoin valuations. But let's focus on stocks and bonds here. So to the extent that the Red Sea remains largely closed, that's an ongoing moderate-sized inflationary pressure that's, it's up against other disinflationary pressures. To the extent that things exacerbate, and say the U.S. government, U.S. military gets more involved in certain regions, that can exacerbate the fiscal deficit and result in more bonds coming to market than were otherwise expected, which again can be negative for interest rates. Like it can be problematic for interest rates, and therefore problematic for equity markets. It can force the Fed to monetize debts that they would have otherwise not wanted to monetize because they're trying to be hawkish. And so those are the main things. There's kind of that baseline question of what if the status quo continues, and then the longer term question of, are there nonlinear events from this? For example, if we fast forward, a year or 2 years, there's questions like, is Iranian oil still getting to the market or not, right? For one reason or another. Or is the Red Sea still open or closed? There's things that can kind of spiral negatively should certain things escalate. And so those are the main things: is, does it disrupt energy? Does it disrupt shipping more than it already has? But I think the biggest outlier question is what happens. Does it affect energy in any sort of really meaningful way? So I think that anything that's meaningful enough that it has to go through Congress and the president is unlikely to happen this year. Like anything that would really materially affect them because of how polarized our political environment is. There are some actions that can be done only with the executive branch, for example, but those are generally more restrained in terms of what they can do. And so I generally discount that in this particular year or any one particular year. But they are important to monitor over a longer term period. I also think that this kind of shows the importance of sort of open source versions of what some of these big tech companies do. And so, for example, there's an open source protocol called Nostr that allows people to communicate with each other. It's kind of like an underlying protocol like Twitter, except it's more decentralized. There's no central entity that can decide who gets to post, who doesn't get to post, what they can post, if their posts are amplified or de-amplified, for example. And also you can use it to send Bitcoin to other people. You can kind of tip each other's posts, and then technically the protocol can be used for more things than that. There's also, for example, open source AI. That it's right now it's several months behind some of the cutting edge AI, but it's also the fact that it's more unrestricted, and that can actually in some ways make it better than the technically leading edge stuff that has more filters over it, things like that. So overall, if you go through the list of different tech platforms out there, there are some of these open source equivalents, and to the extent that those centralized ones get disrupted or changed or kind of centralized more and more, I actually think that increases the case for some of these open source ones. And then as well as things like Bitcoin that actually allow for the payment to occur with these different things. I mean, one of the cool things I did was, speaking of Bitcoin in foreign markets, I used the Africa Bitcoin Conference app. It was last year, and so I'm in this app. It's a wallet, and you could use Chat GBTC. Chat GPT with this app payable in Bitcoin without a subscription. And so, basically it democratizes access to some of these AI things that, in recent years have otherwise taken subscriptions. So I think that those technologies can kind of get a leg up should we see some longer term disruption. But yeah, this year I wouldn't expect much. If there's enough technological development, so in other words, enough deflationary pressure, things like AI, or making sure we continue to have abundant energy, for example, then you can get a case where the current status lasts a very long time in the sense that deficits keeping running. Every once in a while, they're monetized to a significant degree, and inflation is, largely offset by the gains in productivity. And the downside of that scenario is that those who own financial assets keep benefiting and benefiting and benefiting, and you keep widening this existing gap we have. Basically, you continue the past 40 years, and you probably get more and more political polarization until you get some extreme nonlinear events. Basically, the rate of those starts to increase decade after decade, or at least the probability of those starts to increase decade after decade until you get unforeseen circumstances. That's kind of one scenario. The other scenario is that if you do run into more acute energy shortages, we don't do sufficient energy capex, and say, for example, we have a major multi-year sustained bull market in energy prices, or AI does not live up to the productivity gains that the bulls expect, for example, and doesn't offset some of the inflation enough, then you can get more acute issues where you get things like yield curve control, you get major currency devaluation relative to commodities or relative to consumer prices, and you basically get a restructuring of the debt. I mean, there's two major ways to default on debt. One is you can default on it just outright, and the other one is you basically print the difference, where you technically give all the units back, but all those units buy a lot less than they could before. It's not the same unit that the contract holder expected when they bought that bond. And so I think one of those two outcomes, basically in either way, it's generally not great for someone who's not prepared for it. You're either not owning financial assets, kind of overall kind of ownership of things that are scarce and cash flow producing or just useful, or you own those and you get devalued. So it's a really kind of challenging binary outcome that's largely based on how powerful those deflationary forces are.
So there's Lyn Alden with her macro analysis, indicating a potential recession looming on the horizon. According to her assessment, the global economy is due for an impending downturn. However, this is a positive catalyst for the crypto space. Additionally, she provided valuable insights into the world of Bitcoin, shedding light on its significance amid the backdrop of economic uncertainty. Her analysis offers a clear-cut view of the current economic landscape, providing investors and policymakers alike with valuable guidance in navigating the challenges ahead. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin. Consider subscribing to our daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis trusted by over 50,000 subscribers for insightful crypto investment information. Click the first link in the description to join our community and elevate your crypto investment knowledge today. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.